Setting up a family office in Dubai comes with important decisions. Today, the big question for many families is simple that should you choose DIFC or ADGM? In this video, you will see how both options compare for international families who want strong asset protection, easy banking, and clear rules. We will cover the main differences, cost, day to day experiences, and which is better fit depending on your family goals. So, if you want a straightforward answer that where your family office should belong, either it's DIFC or ADGM, you will find it today in this video. Before we start, my name is Shiraz Waheed and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So, if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Both DIFC and ADGM are regulatory environments created specifically to attract wealth, family businesses, and global capital into the region. Each has its own distinct strengths. Understanding those differences is key to making an informed choice that will serve you not just today, but for decades to come. Let's start with both centers offer in practical terms. Both operate under the English common law, which means structures are internationally recognized, judgments are respected, and you get clarity when it comes to succession planning. Both DIFC and ADGM are entirely separate from the mainland Dubai court system. This means family office structures established here are shielded from many of the local risks and uncertainties that can affect mainland companies or onshore family businesses. Where the comparison really becomes interesting is the way each center approaches regulations, privacy, cost, and day to day operations. DIFC, that is the Dubai International Financial Center, is by far the most internationally recognized brand in the region. When a banker, advisor, or an institutional partner sees a DIFC structure on your documents, they immediately associate it with high standard of regulations, compliance, and transparency. That can make a real difference if you need to open global bank accounts, hold assets in multiple countries, or reassure partners in Europe, the UK, Asia, or North America. The process of setting up a family office in DIFC is extremely streamlined, but it is also rigorous. You are expected to meet world class compliance standards, maintain detailed documentation, and pass ongoing regulatory reviews. For many families, this is an advantage. It builds long term credibility, and in many cases, it opens doors to private banking or investment opportunities that simply are not available with offshore structures. ADGM, thus the Abu Dhabi global market, is a newer entrant but has quickly become a heavyweight in its own rights. ADGM's regulatory framework is also based on English common law, but it is often seen as more flexible and, in some cases, less costly to operate. This has made ADGM particularly attractive for families who want a lighter touch, fewer ongoing obligations, and potentially lower setup and maintenance cost. In practice, ADGM is favored by those who value efficiency, want to move quickly, or are cost sensitive but still require international grade asset protection and privacy. The difference in brand recognition is real, especially outside the Middle East. DIFC's reputation is decades old, while ADGM's international presence is building rapidly. But it is not quite on the same level. If your family or business is headquartered in Dubai, or you regularly interact with global banks, DIFC may offer a slight edge. If you are based in Abu Dhabi or prefer a newer, agile regulator, ADGM can be attractive. Both centers allow for 100% foreign ownership and have clear processes for establishing single or multiple family offices. The setup process is now more efficient than ever. However, compliance requirements, annual reporting, and auditing standards are generally more intensive in DIFC. For many families, this is a mark of quality. For others, it is an extra layer of cost and paperwork that may not be needed depending on your actual risk profile. When it comes to privacy, both DIFC and ADGM have robust regimes. But it is important to understand that neither offers the kind of secrecy you might find in classic offshore jurisdictions. Instead, the focus is on transparency, compliance, and reputational protection. Your family office is not just a holding vehicle, it is a fully regulated entity expected to meet international standards at all times. This can be an advantage, especially when dealing with banks, authorities, or multi jurisdictional litigation. One practical concern that often comes up is banking. Both DIFC and ADGM entities are widely accepted by banks in Dubai or abroad, but there are subtle differences. DIFC, due to its older track record and perceived regulatory strength, tends to get slightly warmer reception from major banks, especially those with global compliance teams. ATGM is catching up rapidly. For many practical banking needs, there is little difference in the outcome. It can be useful to consider where your banking relationships are strongest and where you might want to grow them in the future. The fee and operating cost are another factor. DIFC is generally a bit more expensive than ADGM, both in terms of setup and annual running cost. That said, the cost differential is narrowing as ADGM matures and as DIFC launches new packages designed for family offices. In either cases, the overall cost is a fraction of what families in London, Zurich, and in Singapore pay for similar levels of regulations and services. The real question is whether you value brand, reputation, and access, that is DIFC, or flexibility, speed, and cost efficiency that comes in ADGM, and which one you value more highly. There are also subtle and cultural community differences. DIFC is physically located in the heart of Dubai, close to major banks, advisors, and large ecosystem of professional service providers. For families who want to be close to the action or who value regular networking, seminars, and social events, DIFC has a certain energy that is hard to replicate. ADGM, by contrast, is based in Abu Dhabi and has cultivated a more discreet, private atmosphere. If your family values privacy or you are based in Abu Dhabi, this can be an attraction. Both centers have robust dispute resolution systems, excellent digital infrastructure, and English speaking staff throughout. In practice, you will rarely encounter operational friction in either, but your personal preferences may guide your decision. So, if you ask me which one is the right for your family, well, there is no universal answer. If your priority is maximum global recognition, regulatory prestige, and direct access to banking and investments, DIFC is the established choice. If you want efficiency, lower cost, and a newer regulatory environment that is more willing to innovate, ADGM is exceptionally strong in these areas. In reality, many families operate in both, depending on the needs of different branches or asset classes. You may want to seek independent advice and map out your family's objectives, risk profile, and geographic preferences before making a final decision. Both DIFC and ADGM are world-class options, and either can support your family's legacy for generations to come. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra-wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.